Hey everyone, Canoo management has said that it hopes to get to a 20,000 vehicle run rate by the end of 2023, which begs the question, does the company even have enough cash on hand to get that product to market? So that's what I'll talk about in this brief video here, so let's get right into it. Management saying that their demand is multi-year, contractual, and more certain, which is good news for Canoo when it goes out to raise capital, to raise cash. If it's got those contracts on hand, it can then take it to shareholders and take it to investors and say, look, we've got orders. All we need is the cash so that we can buy the materials and make the product so that we can deliver it and meet these sales and get that cash from the customers. The company said that their manufacturing processes are easier to execute. The company says they use less parts. They don't have to deal with the expensive infotainment systems and things like that go into consumer cars, because they're delivering products for commercial users to begin with. So they don't have to deal with all that kind of stuff, which is good news for Canoo investors. So unlike others, their production matches their demand versus being making production for potential sales. So their production is matching demand. If they have demand for 20,000 cars for the first quarter, for the fourth quarter of 2023, they'll make 20,000 cars for the fourth quarter of 2023. If they don't have that, they only have 10,000 orders, they'll make 10,000 cars. So they are aiming to match their orders with the production, and so they're not stuck with extra inventory, which can be dangerous if you're a small company trying to grow and you're limited in terms of the cash you have on hand. So I like this strategy from an investor perspective, to match the demand and not overproduce, because then you'll get stuck with that inventory. So right now the company says they have access to liquidity. They have 149 million at the money market offering, and they also have a $149 million PPA facility. So this isn't money that they have yet, but this is money that they have access to should they need it, or when it comes time to buy the materials and start ramping up production to make the sales, they have that liquidity available. So in their most recent quarter, they used $67.2 million compared to $120 million used in operations in the same quarter the prior year. So they reduced their cash burn, which is good news. They also reduced their capital expenditures to 18.4 million compared to 28.4 million in the 3 months ended March 31st, which was impacted by the ramping up of their Oklahoma City manufacturing facility, which they just secured the long-term lease on, and they're just now building out that facility, equipping it to get it ready for production in the second, third, and fourth quarter of the year. So to answer the question, do they have enough money to get the product to market? The answer is yes. The answer is yes. They've got enough. Well, I should clarify that. They've got access to enough money to get a product to market. Right now they only have as of the end of the quarter, they only had $6.7 million in cash. So that alone was not enough, but they have access to $300 million in capital to get their product to market. So they have access. So the answer is yes, with the caveat that they have access to the capital, not they already have the capital on hand. So investors can look forward to Canoo starting to make sales, generate revenue, and ramp up production over the rest of 2023. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.